afternoon. This is May 8th, 2021. So this is your metals update. We start off with a monthly chart, and then everything else is weekly, giving you the bigger program. I already on Friday had put out for my paid subscribers all their updates. So the event of the week, and I think you know this, was the missing the jobs data. Got 266,000 jobs, not the million that the market was looking for or anywhere near it. Then they made the situation worse by taking away in the March number several 100,000 jobs. That isn't a good thing either. What does this do for the Fed? Well, I can tell you, if I'm the Fed, I'm still saying I'm not getting that sustainability. I see slow growth in jobs, but not I'm getting 1 million a month and 2 million a month as people were talking. For those making bets that interest rates have to go higher, they're forced to wait. And let me give you the argument that they're caught with, where the bet on what they're trying to do, I think, is flawed, looking for the higher rates right away. And of course, I can be wrong on this like that. If you look at the $300 a week federal relief plan, you add it to the state money. If you're getting that, forget that you have children or anything else. If you're getting that, you're making more money off of those payments than you can if you're getting $15 a week. So while the restaurants are opening and they want you to come back and work for your tips and everything, these people are sitting back going, I make enough money right now. I'm going to stay off my feet. I'm going to do whatever. The politicians will tell you different, and I get it. The problem is this is what it is. And no, I don't think the Democrats are going to rein it in. They've promised this to the people. They're in May. They're going to have to live with it because they've got an elections to think about. And if they roll this back, how does that do for their constituents and the people that are running? Not Republican that I'm talking, not Democratic, the way it is. So I think it delays everything. And I know that I might be in the minority there that thinks that. Chamber of Commerce thinks I'm right. So we'll see what happens. In the meantime, you are up monstrous in the stock market. Give you an idea why I tell my traders in my subscriptions not to go through major reports. If you were to have asked me, what is this market going to do if we get a big miss in the jobs data, I would have thought it was bearish, just logically. It's bullish as can be because I didn't take into account and think about the interest rate cycle that gets delayed. What that did is it drops the heck out of the dollar. It tells gold, okay, you don't have those interest rates to fret about right now. Boom, that market explodes. And the copper market, which is dollar sensitive, explodes as well. I wish I could answer why silver didn't move, but I can't. As for what's going on in the energies, you better beware of the ransomware attack on the Colonial Pipeline that occurred late Friday. Now, as this is going on, if they can't get get it beat, they either pay it or they beat it, then you've got a problem for the products going on in the Upper East Coast. Why? Can't get the pipeline going. What do you do for gasoline? What do you do for distillates? Do you really need crude oil if you can't refine it? Big problems. When we take a look at gold on a monthly basis, the battleground has been what I've been saying for the past couple of weeks. It fell down when it lost its embedded reading. Right here. Bingo. That often leads to price in the 18-week average of closes making a run at each other. Okay. What I also teach in my charting course is that the 18-week average, the 18-day average is where markets like to figure out, it's a neutral point, like the DMZ zone between North and South Korea, between bulls and bears. What's the market going to do next? And it fights at that number. That battle hasn't been decided. I wish I could tell you, oh, that's it. What I can say is when the market stays over the 18-week average, the bias is up. I can say that the swing line has lower highs, lower lows. On a weekly chart, this market is not in a trend. I can tell you that on the weekly close, it finally, and I'm going to show you, last week you were not over this number. That was April 30th. I said, you know, the battleground's going to be here. You got over it for the first time. This tells me on pullbacks that 1779.10 is probably going to be a support area on pullbacks if you get down to that number. The weekly chart looks a lot more bullish than the monthly. Higher lows, higher highs. Remember, the monthly's made up of 4 weeks of the weekly, so got to keep that in the back of your mind. This is bullish. The battleground up until this week, I'm going to pull you back right here, fighting at that 18-week moving average, and now you get the move up. What does this tell me? That the bulls are going to step in, try to support that number if the market falls back to it. They won't want to see the market under 1750, 460. What is the potential for an upside target? It would be the upper Bollinger Band. Now that number is going to slip a little bit come Monday, and that's because it's been slipping prior to that, and it's going about $15 at a time. So my guess is around the 1860 level is where that market's going to have some problems. It's a guess. We'll see where it's at Sunday night as the numbers start coming in off the figure. As you move with the momentum, it's up and not overbought. So who took control of the markets? The bulls. When did it happen? Friday. That kicked the whole week just the way that it is. The gold-silver ratio hasn't really changed. Silver, even though it didn't gain, in fact, it lost pretty good to gold on Friday, has been gaining so much that it still hasn't crossed over that line in the sand, that 18-week moving average of closes. Why? Because silver's already approaching its upper Bollinger Band. It's knocking on the door of the resistance area. The trend is up, the bias is up, momentum is up. That is the resistance area. I think the pros will defend the 2601.5 area. First challenge of a Bollinger Band is often, I'll come back to that, often where pros take money off the table. In the copper market, it's the first close we've had, if you'll take a look, in a long time, back since beginning of the year, over the upper Bollinger Band. It is not embedded. Market may have gotten ahead of itself in the short term here, ready to come back down a bit. It is in a bull trend. It doesn't have the embedded reading, and the bias is up. In the platinum market, the market is worked off. Now it's present tense, worked off. Being what? Overbought when it lost its embedded reading here. It's kept its uptrend. Next target, 1306.50. To prove that the market isn't going anywhere, you'd have to get back under 1155 on a weekly basis. This chart still looks bullish, and I think the bears have taken control of the dollar, and I think they're going to be aggressive bears on rallies. If you were to cross this week's high of 91.43.5, that could mean a run back to the 92.95 level. Don't take it out, and next target could be 89.47 on the downside. So you have an awful lot to deal with here, as you can see. And one of the ways that I help you deal with it is each morning. You know, at 5:40 each morning, I start recording. I could record at 5 in the morning Chicago time. I'm up early at 4. I've already watched. I start watching Bloomberg and CNBC to see what is going on. And from there, I go to Sky. I'm in Europe watching. I read the newspapers out of Europe, Asia. I obviously can't speak, well, I shouldn't say obviously, but I don't speak any of the Asian languages. I speak some French, a little bit of Spanish, so I'm okay with that. And as I look at all this, I start putting it together. Now, the reason you just saw those different vehicles, the phone and so on, is my videos will show in the applications that we give you to view them. If you have an iPhone or an Apple, we will give you a free application with quotes, our other news, charts are in there, delayed quotes. You can move up to real-time quotes for just about $5 a month. I don't take any part of that fee. That's the exchange's fee in order to get live, non-delayed quotes. But our software product's free to you. You're not going to pay us for that. So as you do it, you're able to see everything I'm doing. If you go to our website, I'm able to put on a scroll bar on the bottom. So let's assume you wanted to go right to metal markets. You're just pulling on it till metals line up real big. I do everything for a guy my age. Easy to read. I realize how small those screens are. It's hard. I helped make the charting software where you can read it on these new Android and Apple phones, and you can. So it's a commodity app built for commodity people. I think we'll have our stock quotes working on it right away. We've already got the stock quotes working on our desktop application, so that's already working for you. So as we look at all that, we're trying to give you the game plan. But again, What you're able to work off of is me taking a look at that, my take on what the news abroad is saying, the impact it's going to have, the reports that are coming out. They generally start around 6 in the morning, but really 7:30 is when the heart of the reports and the economics come out. The price, it's inexpensive. It's $7.95 for 24 videos a month, each, sitting there with 20 minutes long. I'm covering the ideas you want, but I am saying buy here, sell there, do this, do that. And a lot of people say to me, well, Ira, in these free videos that you've got on YouTube, you're really not saying that I should buy here or there. And you are 100% right. The regulations, and I am a registered commodity broker, are that I have to be able to protect what I do in a certain way. Would have to be behind, if you will. That you've got a user ID, a password, and that I've put up a disclaimer. You don't want me doing that on every recommendation here, and I don't want to do it. I want to be paid for it just the way you pay a dentist, just the way you pay a doctor, your butcher, whatever it is. I don't think $7.95 for 24 20-minute videos is going to break the bank. That's my point. If it sounds of interest to you, go to our website. Let me tell you another thing that we're doing. My What's Up is going to start hopefully this week. Got fingers crossed. And you will get an invitation. You come into a website. I'll pick a time. It's probably going to be around noon to 12:30 Central Time. You bring in what you want me to cover, the markets. I type them in. We bring up a chart, and I move to the next one. You've all seen Kramer at the end of the day with his lightning round. Think of it that way. All right, for the futures markets. That's what I'm going to be doing. And I will cover spiders and ETFs as well. I'm Ira Epstein. You have a great day. Please take advantage of what we do. Your subscriptions to our paid research are what keeps these going. Take care.